Hello everyone, my name is Aulia Shafira and I will present my evaluation of Siloam International Hospital. And in this presentation, I will assess whether the company has achieved its objective of maximizing shareholder value based on a financial performance and valuation analysis. Overall, Siloam demonstrates stable growth with a consistent revenue expansion and improving cash value generation. However, profitability remains relatively moderate and has declined slightly in the most recent years, indicating some pressure on the margins. From a valuation perspective, the company appears overvalued, as its intrinsic value is lower than the current market price. This suggests that while the company is operationally stable, it has not fully delivered value in line with the market expectation. For the company background, we know that Siloam Hospital is one of leading private healthcare provider in Indonesia with a strong presence across major cities. And the company operates in a growing industry supported by increasing in healthcare demands, rising income levels, and greater health awareness. Slum is positioned as a premium provider supported by strong branding, quality services, and ongoing adoption of digital healthcare technologies. Next, I will show you the financial performance analysis by the graph and my analysis on this performance. On the first one, profitability improves steadily until 2023 with a better return on asset and equity. However, in 2024, we see a decline across all profitability ratio. This indicates that while performance has been strong, maintaining profitability will be a key challenge in the future. Next one, liquidity has declined over time. You can see that it indicating tighter short-term financial flexibility. At the same time, leverage has slightly increased, meaning the company relies more on the debt. And then operational efficiency, you can see it remains stable, but overall, financial pressure is increasing. And from a DuPont analysis, the improvement in the ROE was mainly driven by a better operational performance. However, the recent declines show that this momentum is not fully sustained. This highlights the need to strengthen profitability driver. Okay, next I'm also compare Siloam with the competitor is Mitra Keluarga, or we call it a Mika. The result in here is compared to Mika, Siloam is more efficient in using its asset. However, we know in this graph that Mika outperform in profitability. This offers suggests that Siloam still has room to improve its earning performance. Next, I will talk about the valuation analysis. And looking ahead, in the company is expected to grow steadily over the next 5 years, with a consistent increasing in the revenue and net income. Uh, I can say that the assets are projected to grow faster than the liabilities, leading to a stronger equity position. And this reflects a stable and improving financial outlook. And for the free cash flow is projected to grow consistently, supported by improving operation performance. Although investment in capital expenditure and working capital continue, they remains manageable. This indicates that the company is capable of generating sustainable cash value while supporting its growth. I'm also analysis about weighted average cost of capital of WACC, and from this table we know that the company WACC or WACC is estimated at 9%. This means that it's relatively balanced capital structure, and and also mean that a higher proportion of equity suggests lower financial risk while still managing an efficient cost of capital for valuation purpose. And then the last one is DCF or discounted cash flow analysis. And based on this, we know that the intrinsic value is lower than the market value, and also done the relative evaluation, uh, where a Siloam trades a higher multiples compared to the Mika, and this confirm my hypothesis that the company is currently overvalued. So, in the conclusion, while Siloam shows stable growth, it has not fully maximized shareholders' value as reflected in the overvaluation. And then to address this, the company should improve operational efficiency, control costs, and focus on high return investment. At the same time, strengthening long-term growth through the service expansion and digital innovation will important as well. And then this analysis is based on a company report of physical disclosure and external data sources such as Yahoo Finance and Global Institution. I think that's all for my presentation. Thank you very well.